The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Two aggressive growth companies with somewhat similar focuses as far as their businesses are concerned. That's what Brian Boland's going to talk with us about here as we start with CONN's, a specialty retailer.
Right, specialty retailer, and the CONN story is a pretty big one. We've been talking about CONN's for the last several years, and a lot of it has been negative because of their customer base is what you would call Alt B, right, Terry?
And well, the insurance industry might refer to it that way.
Okay, subprime customers, basically.
Yeah, credit industry calls it that.
Right, they've had a history of, I guess, delays in payment, right, or delayed pays, for customers. So that's just it's just a frequent case for them. They're based in Houston. The Hurricane Harvey went through, really hurt the town, and a lot of the areas that were really affected happened to be low-income areas, and there were high-income areas as well. I don't want to blanket statement that, but when you have low-income people and delinquent customers just in general, when they have the disaster, when they get back on their feet, they're likely to go to a store that accepts their credit, which is going to be CONN's. So there could be a long-term cycle here for CONN's. Also, the same deal more or less for Irma in Florida, although the company isn't, it's based in Houston, so we're going to see a little bit more focus there. If we go to the computer here, we see that CONN's is a Zacks rank #1. It's a B for growth, and normally I like an A, but I'll take a B. A B for value too, so I don't get my
divergence.
That's right, Terry. I mean, we've turned this into slapstick comedy almost, but I do like the divergence. We've seen estimates for CONN's move higher over the last 90 days, 36 cents to 51 for the current year, and for next year, 90 cents to $1.14. So those are big moves, but obviously the big thing to point out is this most recent earnings report that happened not too long ago here. The company really knocked it out of the park with a 26-cent report when estimates were looking for a loss of 2 cents. That's a 1,400% positive earnings surprise. So that's really good. I think all the beats here have been pretty good lately, but that one really outpaces it. So the idea here with CONN's is that subprime customers will go to subprime store, and there is a need now for them, and that will be over the next several months. I think we'll see that company benefit from that.
All right, they get to fill a need. We're talking about this on September the 26th, by the way, for those people wanting to gauge the time reference there.
Sure.
Then there's Signet Jewelers. They're engaged in jewelry retail.
Outstanding. that one, that was a glittering pun.
I'm telling you.
Yeah, so it's a retailer just as CONN's is a retailer.
Right.
Obviously, Signet's in the diamonds and jewelry business. It is a Zacks rank #1, and it has an A for growth and an A for value. Again, no
divergence.
No divergence, Terry.
Right.
I like to see a growth score of A and a value score of F because it tells me I'm on the right track. It tells me that growth investors are looking at this name much more so than value investors, and they pay for stocks differently. The earnings estimates for Signet have been moving higher. 667 90 days ago, 715 now. Next year, it's also moving up, 710 90 days ago, 739 now. So there's a nice little bit of implied earnings growth happening there. Earnings history hasn't been that great. We've seen a miss in here, and it was a big one, a 38% negative earnings surprise. But very recently, they got back on the right track here with just about a 21% positive earnings surprise. So things are looking good in the world of diamonds.
Well, they've been around for a while.
They have, and it's coming up on the season, engagement season.
Yeah.
Where people tend to engage, to pop the question to their significant other in the November, December timeframe. That's right around the corner here. Maybe that's why investors are looking at this stock again.
Ah, good point. Do you own either of these?
I do not.
All right. Well, you're not going to be popping the question anytime soon.
No time soon, Terry.
Thank you for your interest in what Brian has to say. I'm glad somebody has some. In the meantime, you can pique your interest on our website as far as more information on a wide variety of companies that we cover there. Stock picks, stock picking strategies, commentary. It's all there on Zacks.com. Get over to the homepage and start looking through it. With Brian, I'm Terry Ruffalo.